What is going on, guys? Welcome back to the channel. I hope you guys are having a great day. I hope the portfolios are green. If you're fully invested in AMC, your portfolio is up about 1.5% today. And let me just tell you, the liquidity crisis is getting worse. And this is very exciting for those of you guys that are involved with AMC. It does mean the markets will continue to head down and you will see less money for hedge funds to be able to cover on their margin calls once AMC does start to squeeze. Now, if you guys are confused, don't worry. We'll go over all of that and much more here in this video and keep you guys up to date on what is going to be happening throughout the rest of this week. So let's get into it. Hit that like button and subscribe to the channel if you guys have not already. Only about 50% of you guys are subscribed to the channel, and you definitely want to, so you can stay up to date with the moves that I am making, trades that I am looking at, the concepts here that will make you a lot of money, like this one particular trade that I called out many times here on this channel, the BP $35 call. It's up 183%, up $505. I bought those at $18. Now currently at $52. That was the free trade I brought to you guys. And if you guys want to join the buy and sell alerts and get access to all of the other trades that I make in real time, another 61% gainer today and a couple other good ones as well. Link down below in the pinned comment to do so for that. But nevertheless, that is not as important as getting into this information. So first things first, like I said, AMC is up 1.31% today. And that is definitely a good thing as the NASDAQ is down over 1%. So you're definitely seeing a lot of strength in AMC. And you are seeing AMC did fall under 15 to $14.38 per share today, and we sharply rebounded back up. This, furthermore, if you guys, are doubting what I've been saying, you certainly shouldn't after what you're even seeing today. Fell under 15, instantly huge demand zone got triggered. You go right back up above $15 per share. So that's why I said that you've already reached that max pain that you are going to feel in your positions. Sure, if we do see bad CPI, which is Thursday, and that's going to be a big catalyst, AMC could fall under 15, but it's likely to be this kind of thing that you are seeing, like we are seeing today. You go under 15 for a brief period and then you go right back up because there is such a large demand zone under $15 per share. People are eating up these shares under $15 per share. So we will come back to the technicals. AMC is taking a move up right now, up about 1.66%, getting very volatile here. So it's looking good. And we also do have some good news as well, which is we've already went over this, but it says the Batman box office numbers point to DC's potentially promising future. And then it says the Batman opening box office numbers shatter expectations, and those were well over $100 million, specifically $128.5 million domestically. That is just domestically. So this is the third largest movie at the box office in 2 years, only behind the Spider-Man 2 opening weekend. So this is definitely a sign that the box office is here, and it is surely here to stay. If we take a look at Adam Aron's Twitter, he also did tweet about this last night. He says, Batman is the hero of Gotham and of AMC. AMC's third biggest weekend in more than 2 years, behind only first and second weekends of December's Spider-Man. 4 million guests in AMC theaters globally, more than the same weekend in 2019 or 2020. Movie theaters are coming back. Hashtag choke on that. That might actually be the title of this video because choke on that. All the bears and hedge funds with short positions on AMC. It's not really a justifiable move at this moment. I think it's kind of suicide to a certain extent. But as far as the other catalysts that you need to know for this week, the big ones are going to be that CPI number on Thursday. And if we come down here to Thursday, you could see that the core CPI month over month comes out at 830, continuing jobless claims, core CPI year over year, core CPI index, all of these data points, including initial jobless claims, all comes out at 8:30 on Thursday. So you have tomorrow. That's going to be the real digestion of what we're seeing happening today, the big catalyst, and then you're going to see that CPI data that will be released, and that's going to be another big move for the markets. But as far as what is happening today and what is really helping to dry up liquidity, it is the fact that Biden just announced a ban on Russian oil. It says Biden says U.S. will ban Russian oil imports in response to Putin's invasion of Ukraine. And you do have Europe, you do have other countries that are saying they're going to phase out their natural gas and oil usage from Russia by the end of 2022. Well, Russia warns of $300 per barrel oil, threatens to cut off Europe gas if West bans energy imports. So that's just what we did. And it looks like, Russia, unless they're playing a big hand in poker here, they're going to do something, and that's going to drive up the price of oil yet again, and that hurts everyone. When commodities go up, stocks tend to go down, and you tend to get led into a recession. This is also going to make the Fed at least think about or perceivably act more aggressively to raise rates and to control inflation, because energy cost, like oil, is the biggest sector of CPI. So that CPI reading on Thursday, it's going to come in very high, and I think you're going to see some pretty hawkish words from the Fed nonetheless. But the fact of the matter is that when oil goes up, it hurts hedge funds, it hurts banks, it hurts consumers, it hurts everybody besides the oil companies. So that could be a bit of a hedge to your portfolio. That's kind of what I've been doing, with these BP calls, the Exxon calls, all of that is kind of hedging out the portfolio here, because these guys are going to be the main beneficiaries of a big move in oil. And if Putin is talking about $300 barrels of oil, the price of oil right now is only at $133 for Brent. So you're talking about over a double from this point, and would not be good for liquidity. You would help dry up money across the board, and that leads us closer to the MOAS. And historically, whenever oil goes over $100 per barrel, you always see a recession after that. So we're definitely heading into a recession as well. It really slows down demand, and it will hurt companies' earnings as well. So this turns into, from a commodity move, just affecting people at the gas pumps, into it will start affecting demand. If people start having to pay 100% more on their gas, they have to cut out in other areas, and that's what you're definitely going to see happening. And we'll just have to wait. It looks like Russia, they might react to this overnight tonight, and that would certainly make oil go even crazier. So I don't think the oil trade is done. If that's something you guys wanted to be a part of, my trades are not financial advice. I'm not a financial advisor. Who knows? They could go straight back down. You could see a big rally, or you could see a big drop. Not really my job to, guide you in that direction, unless you want to join the buy and sell alerts. But AMC is up about 2.63% now, seeing a major rally as we are filming this video. So that is definitely on the positive note. The Ortex data is giving us 20.83%. Actually, let's go ahead and refresh this. 20.83% short interest of free float. 107.28 million shares that are sold short. Cost to borrow max of 1.9%, and the utilization is at 100%. The days cover is at 2.48, as well as the option activity. You are seeing 27% positive order value. 5 orders totaling $636,000. So not a high dollar amount that you are seeing right now. So it's really hard to gauge if hedge funds are feeling bullish or bearish as far as AMC using options. When you get these low dollar amounts, you can't tell too much. So I'm not going to hold that against AMC too much right now. But by the end of the day, by that video at 4 o'clock, you will definitely get more coverage on that situation, and that will be important. As far as the margin debt, if you guys are unaware, the margin debt is now sitting at $829 billion, down about $110 billion since October. And I think a lot of that is retail. I do think it is starting to affect institutional investors as well. And I think that is giving you somewhat of a lagging indicator of where the margin stands as far as institutions are concerned and all of that. But you're definitely seeing liquidity being restricted. As far as the stock tracker data as well, not anything too crazy for this week. About 4,000 calls that are in the money, 81,000 that are out of the money. Sure, you could see a rally based off of that big difference here from calls that are in the money compared to out of the money, but I really wouldn't hold a hat to it. Now, next week is going to be the important week. About 7,000 calls that are in the money, 308,000 calls that are out of the money. Now, that is a large amount, and if we do see a rally, make that move back up to about $20 per share, you definitely would see a lot of hedging that has to be done by the market makers, as well as that. On the put side, 74,000 puts that are in the money, out of the money puts at 61,000. So if you do see that move close to that $20 price or above that, you're definitely going to see that continued rally. So things are looking very good. The liquidity crisis is getting worse, and I think it's only going to continue to get worse as Russia will inevitably respond to this and start cutting off oil and natural gas even more, and that will hurt everybody involved. It's not just you at the pumps, hedge funds, institutions, banks, literally everybody will be affected. Russia is no longer an investable country. They are more sanctioned than North Korea and Iran. They are the most sanctioned country in the world. You cannot invest or use your prior investments as collateral to service your margin loans or margin calls anymore. So add all of this together, I could paint you a pretty ass picture and detail it for you guys, but I think we did a pretty good job in this video. The situation is getting very dire for the hedge funds, especially those that were invested in Russia a lot, like Citigroup. 10% of their assets under management were in Russia, so they just lost their ass, and that is only one bank out of all of them. They're all exposed. They're all hurting. So that's going to be all for this video. As far as the technicals, like I've said many times, nothing too crazy here. Watch that $15 level. I do want to close above that, and it looks like we are going to. 1775 is the key level above that. And then the 20-day simple moving average is sitting at $17.35 per share. So if we see a big move by the end of the day and we could get up to those levels, that would be good. If we could close above 16, that's music to my ears. Either way, it's looking pretty good. MACD is pretty neutral. The RSI is on the lower end range at 39.90. So it's kind of on the oversold side. But again, nothing too crazy there. But it is looking very good. So that is going to be all for this video. Thank you guys for watching. Hit that like button and subscribe to the channel. Join the trading community. Link down below in the pinned comment, as well as get yourself free stocks. Links down below in the description. And come join us on the live stream later on tonight. Again, thank you guys for watching, and I will see you in the next one.